Imagine you're renting a shop or office space and the owner isn't paying goods and service tax. Starting 10th of October, if you're registered for GST, you'll need to pay 18% GST on rent even if the owner isn't paying it. This is called the reverse charge mechanism, where the tenant and not the owner pays the tax to the government. For tenants under the composition scheme, this gets tricky. They must pay the 18% GST but won't be able to claim it back as input tax credit, which usually helps businesses lower their tax liability. This will increase their need for working capital. However, regular taxpayers can claim this GST payment as ITC, reducing their overall tax burden. If neither the tenant nor the owner is registered for GST, these rules won't apply. If only the owner is registered, the owner collects and pays the GST as usual. But if the tenant is registered and the owner isn't, the reverse charge mechanism comes into play. Since most property owners aren't registered for GST, tenants will need to pay the 18% GST by cash or check, as they can't use their ITC balance for this payment under RCM. In a nutshell, if the tenant is registered and the owner isn't, the tenant pays 18% GST under RCM. Tenants under the composition scheme can't claim this tax back as credit, so more cash is needed. And regular taxpayers can claim the GST paid under RCM as input tax credit. Stay tuned to Business Standard for more such updates.